We don't need charts today in Nas Alhajji, do we? We can just be.
It's a nice
How
joke
are
this morning.
how
Good
are you
morning. Good
today?
morning. Very
So,
well. Very well.
I guess was a little incident in the Gulf, Iranian hijacking of a tanker, and it said
Yeah, but they
something about.
became they
Go ahead.
became so they are so normal right now. So they are not going
Okay.
to affect the market in any way that they used to in the past.
Okay. Could it be used eventually as some type of rationale for things beginning to really heat up?
Well, I don't think so. I think this is just part of the weekly life in
Okay.
that part of the world. So
All
it
right.
has really no impact.
And I just have one other question. I'll let you, really thank you for bringing this PowerPoint. I would like to ask you if RSPR is at, I think, 40-year lows right now in us. Does that put a floor under crude? And is the U.S. beginning to refill it, or they haven't even started to refill this?
I'm glad you
Okay.
asked this question because it is part of the presentation, and I have few slides on that.
Okay, cool.
So
All right. So, Europe was very fortunate last year with weather, and natural gas has crashed. Do you get lucky 2 years in a row and have abnormally warm winter in Europe, or is this the winter where what they were afraid of last year happens?
well, no one can predict the weather precisely, but if it is going to be a severe winter, it's going to be really bad. And I will show a slide here, and then I will comment on it.
Okay.
Let me just do this
So I'm
here.
just going to let you take it away, and obviously all of these are top of mind for you, and you're one of the best at
Thank you.
staying.
Thank you. There are three issues.
Go ahead. Go ahead.
Thank you. There are three issues that I want to mention today. We published a report last week on the possibility of disruption in Libya and what its impact on the market. This week, we are going to publish three reports. In fact, we published one this morning on it's related to Europe's energy crisis, where we looked at LNG exports from Israel and Egypt. Israel exports gas via pipeline to Egypt, where it's converted to LNG and then exported to Europe. And LNG exports of Egypt are declining substantially. One of the reasons because of the massive increase in domestic consumption of gas, and the other one is the low gas prices, because what Israel charges Egypt is literally will make Egypt lose money. Speaking of Egypt, by the way, a company basically went for an IPO. The first day of trading was yesterday, and the stock went up by 60,000%.
Should I take profits?
60,000%. The government intervened and nullified all the contracts, and they canceled the whole day.
Doesn't sound like it sounds like it makes the Chinese market look straight.
So today is the official day, and it went up by 3,500%.
Okay.
That's speaking of Egypt. But the idea here is when we talk about Europe, Europe is not out of the wood yet, especially when it comes to natural gas. And we still have many problems in Europe. And if the winter is severe, we have the hurricanes in the Gulf of Mexico, that's in the summer and fall. And then if the winter is severe, we are going to end up with several issues. And the report that we released today showing that Egypt's exports are declining substantially. There are no additional exports coming from anywhere else. And if the winter is severe in Asia, then that competition between China and Europe is going to heat up again, and is going to lead to probably another record price for LNG.
Okay.
The issue that I want to show, and is related to the energy transition, that last year, as we mentioned in the last show, last year we witnessed a kind of unprecedented competition among energy sources, simply because their prices were going up and people were shifting. And now we got the final numbers for 2022, and it shows a noticeable increase in oil use in power generation in several countries around the world, including the United States and several European countries.
Okay.
We haven't seen this in probably at least 3 decades.
Okay.
So we are seeing this because of that competition. So link that to LNG. If LNG prices go up again and they reach record again, then oil use, especially in the northeast of the United States, in power generation is going to increase.
So the demand picture is good. Let me ask you this then. Up until recently, then why did the Saudi cuts both end up with one-day rallies and then bigger declines? And I also would like to know if you think that Russia could still squeeze Europe more than they have.
Sure. For the Saudis, let's go back and look at the OPEC Plus meeting. The OPEC Plus meeting, most analysts and traders expected OPEC Plus to cut production. They did not. What they did is they said, okay, we are going to extend our cut to end of 2024. Because there was no cut, this is bearish, and oil prices would have declined by several dollars. So what the Saudis did, said, okay, if I cannot get OPEC Plus to cut, I am going to cut voluntarily 1 million barrels a day, an additional 1 million barrels a day, to compensate for the OPEC cut that everyone was expecting. So why people expected prices to go up from the cut? It was just a compensation for a bearish event.
Yeah. Okay.
So we have to look at the other side. Where would prices be if the Saudis did not cut?
Yeah, a lot lower.
Now, regarding Russia, it is our experience with Russia since 2016, since they joined OPEC Plus, that they will not cut voluntarily. They never cut voluntarily. They are forced to cut either through maintenance, weather, natural events, fires, explosions, whatever.
Yeah.
And when the Saudis force them to cut. We are seeing them cutting right now. Why? Because the Saudis used a policy of carrot and stick. The carrot basically is they change their quota a little bit, so they allow them to increase production or without violating the quota, on the condition that they will actually cut. But what was the stick? In our view, those tankers that are near Ain Sokhna at the mouth of the Suez Canal, we have about, until 3 weeks ago, we had 24 million barrels of oil sitting there, 11 tankers, all of them VLCC. And now they decline a little bit, but we have about, this morning, we have 8 of them still there. Some of them been there for several weeks. And the idea here is this did not happen before, except in 2020 during the lockdown. So there is no reason for the Saudis to have them there unless they really want the Russians to see them and say, you know what, if you are not going to cut, I'm going to flood the market again, the same way I did in March 2020. So you cut or I'll flood the market.
That's when we went negative.
That's after that, yes.
Yeah.
But looking at this slide, basically, this just shows how Egypt's exports basically declined. That's LNG exports declined, and most of that basically goes to Europe. And now on the SPR, on your question, this is the SPR. You can see where here in the middle of that in 2001, you can see that built. That's when George W. Bush decided to fill it up after September 11th terrorist attack. And then this is the decline at the end here. And these are what we have right now. We have about 144 million barrels of sweet crude, and we have 203 million barrels of sour crude. The recent releases, the 26 million that were mandated by the Congress, all of them were sweet crude. Now, why we are talking about the SPR for the same reason you asked me, because the administration started supposedly refilling the SPR.
Okay.
To me, it's not a refill when you release 221 million barrels in 2022, and you come to 2023 and you add to that 26 million, so you are talking about almost 235 million, only to buy 12.
Yeah.
So that's what they are buying, 12 million.
Yeah.
So
right.
The first thing here, looking at 2022, I know a lot of people are against the withdrawal, and a lot of people along the political lines attacking the Biden administration. I am being apolitical here. The fact is, this release of 180 million in 2022, it changed the whole literature of the SPR. It changed the foreign policy, it changed the energy policy, it changed a lot of things because it was so effective politically, so effective strategically, so effective in terms of national security, so effective in terms of lowering prices. It was an amazing policy, and this has changed the literature.
It was a great short by the administration at one point.
So you look at this chart, you can see the correlation between prices and the SPR.
So now they're taking profits, but they're still short, right?
I don't know about profits because based on our calculation, they sold oil at $95.25, $95.25.
Well,
but the cost of it was over 200.
Oh.
So financially,
why?
Because
why 200? I mean, you know, the market's never been there. Is it just
the
carrying charges?
I'll tell you how. I'll tell you how. Let's say, look at the oil that they bought, let's say in 1978.
Yeah.
Okay. They bought it at that time, let's say at $27. Okay. But $27 of $1978.
Okay. Yeah, the currency.
Okay. So you got to look at the you got to look at the inflation, you got to look at the interest rate, and then you got to look at the infrastructure cost, and you got to look at the management cost. So the cost was over $200. So financially, from an accounting point of view, it was a loss. But from a national security point of view, from a strategic point of view, from economic point of view, it's priceless. Because the whole world benefited from a lower price. Otherwise, prices would have been at 140 or more without the release of the SPR. And Putin would have literally controlled Europe anyway without the SPR. So the benefits were great. The strategic benefits were great. But the bottom line here is all the refill, all the 12 million they are refilling are sour crude. They are sour crude. Why? We need sour crude. We don't need sweet crude because the shale revolution added 8 million barrels of light sweet. I have them under the ground. I can produce them at any time. Why I have to store it? I have no problem with light sweet. But most of my imports, almost 97, 98% of my imports as shown here is sour. So you can see this distance here, almost the whole chart. Everything is sour here. Okay.
Yeah.
So if I have disruptions around the world, I need SPR to compensate for that. So I need sour. At the same time, the problems I have in the United States, always in the Gulf of Mexico because of the hurricanes.
True.
And that's sour too.
Okay.
So the two things I want to compensate for, both of them are sour, and therefore it will be a good idea to rebuild the SPR with more sour and stop building the sweet.
Okay.
But the bottom line of this is there is a very limited impact on oil prices. Why? Of course, the 12 million is nothing, so there is no impact there. But assume that they decide to refill 60 or 90 million. Limited impact too. Why? Because the injection rate, technically speaking, the injection rate is very small. That's why they are buying 3 million or 3.2 for a month, because it takes a month to re-inject 3 million into those caverns on one site.
So this crisis that Europe's going to have, how does it play out? They're already in pretty weak economic numbers. Some people are saying Europe is in recession already.
Yes, some countries are already in recession. But this brings us, since we are speaking about Europe, so let me show you the picture of Europe, because this is very important point.
And the
If
Chinese
you read,
reopening, Anas, has been disappointing too. Has that had something to do with prices really not making a move, big move?
it wasn't disappointing for us. Anyone can go to our oil market outlook. They can search for it. EOA 2023 oil market outlook. We published this in early January. We wrote most of it in December. Everything happening in China today is written there.
Okay.
And
you weren't,
and
you were expecting the reopening to not be, really
correct,
be.
correct. So we nailed it.
Okay.
Well, I mean, we nailed it,
right.
and we have. So we are fine with our outlook. But
Okay.
to bring us to Europe and talking about this, if you read the news, you listen to the media, you watch TV, you would think that coal is gone and oil demand is going to peak tomorrow.
Yeah.
Okay, that's what the
yeah.
media is telling you. And the media is so biased to the extent that I've been frustrated last week because some auto companies were releasing their numbers and the media focused on the sales. So they mentioned the numbers, they mentioned the percentages in terms of increase, etc., for every car, for every manufacturer, etc. When it came to electric vehicles, they did not mention numbers. They mentioned only percentages.
Okay.
Because in this way they can show you a big percentage. Anyway, looking at this chart here, and this is where where the media basically is playing a very nasty role. Look at this chart here. This is world energy consumption by source. That's primary energy in 2022. The year just ended. And what is the conclusion of that? 82% of world primary energy used is fossil fuel.
Right.
How much money we spend?
You can't lift the poor up by abandoning fossil fuels at this time.
Yes, Dale, but listen to this. How much did we spend on renewable energy since 2010 until today? More than 4 trillion. More than $4 trillion.
Yeah.
More than 4 trillion.
So if we had invested that in drilling and energy production, we wouldn't need oil from anyone except if we couldn't get enough sour.
So for $4 trillion, we got only 7%. Half of it was already in existence. So only 3.5% came for $3 trillion. Now let's go to Europe, since you mentioned Europe, and let's look at natural gas. For Europe, despite all the efforts, despite all the money spent on green energy, 71% of energy consumed in Europe comes from fossil fuel. And look at oil, 36%.
Yeah.
And look at gas, 22%. So the idea is, yeah, you talk about this energy transition, but show me the numbers. Where is it? Now, let's move on and look at, because some people say, well, that's total energy, but all the changes are happening in the power sector. Well, here is the power sector. This is in the world. 61% of electricity generated in the world, 61% comes from fossil fuel. We are still 35% dependent on coal. Now, let's look at this one. That's Europe. And this is interesting because 38% comes from fossil fuel, despite the fact that they have large amount of hydro.
Yeah.
Yes, renewable energy is playing a role, but they almost exhausted everything. And the main point, Dale, here is this. Look at the percentage of oil used, 1%. What that means is, if that 27% doubles, has no impact on oil.
Okay.
It might have an impact on coal or natural gas, but it's not going to affect the oil demand. Now let's look at this one. And this is really the shocking one. China.
61% coal.
61% coal.
Yeah.
Yellen was there in China just yesterday, and Kerry went to China to talk about climate change. Good luck.
Well, he's going to. But what do you think? Why do you think Yellen really went there?
I have no idea, but that's Boeing that she did. Probably you've seen the video. That just was. I don't know, was ridiculous. I have no
Okay.
idea why she went there. But
Okay.
I know one thing about
Well,
her
I
is
mean, they
that
did just announce that they're going to restrict even more chips from China as we keep poking the tiger in the eye.
but
Anyway,
she never mentioned anything about the price cap. She never talked about the sanctions on Russian crude, etc., which she is trying to be a champion. Here is my last slide, by the way. I showed you China. Now let's look at
yeah.
India.
Wow. Yeah, they really love coal.
74%.
You know, when I was a kid, my house was heated by coal. There was I lived in an apartment complex outside of Chicago, and there'd be a furnace in the basement and a lot of coal laying around. My mom was never really happy when I came out of there from playing, with coal. But anyway, as a kid, I used 79% coal, just in
Wow.
case you're interested. Before you leave, I just have to ask you one question about what's happening with this new currency, gold-backed, to be used in all kinds of transactions, but mainly at first energy transactions by the BRICS. It's supposed to be launched late August. Do you have any understanding of it and what it might mean to oil markets?
I believe it when I see it.
Okay, show
I'm
me.
still.
You're
I
from
don't know.
Missouri.
Where is the source? Basically, literally, this is people must realize that they have to be aware of what we call circular information. Circular information, basically, you have a news that's all over the media, and you think, oh, look, it's being covered widely. It must be true, but it's only one source.
Yeah.
It came out of one source, and then it became very common in the media, and people have the impression that that must be true and correct. I believe
you have to be have the discernment of Sherlock Holmes nowadays to be a consumer of information. And you know what? It's exhausting. Bring me back to guys like Huntley and Brinkley, and when they were reporters and they didn't have opinions, they were reporting the news. Now every news anchor is also an editorial writer. So what do you do? I mean, I feel like turning off a lot of this stuff, Anas.
First of all, I do not have TV at home.
Okay, that's a good start.
And so I don't have TV, and my kids do not watch TV. But
right.
the whole idea here is, the more the media goes crazy, the more business I get.
Okay. All right.
Literally. And our clients basically made a lot of money when we corrected the news on the spot, like the Wall Street Journal articles about what's happening in the Middle East and the Saudi actions and the Russian actions and the UAE dispute with Saudi Arabia, etc. Our clients benefited greatly from it, simply because the moment the news came out and prices declined by $5, we told our clients, ignore the news, and they ignored it. 2 hours later, they were extremely happy.
Okay. So you do give actionable things out to people that are your subscribers.
Yes.
In the markets.
Yes.
All right. Okay. So this is where you find Anas. I've been talking to him for about 3 years or so now, Anas, and I always learn every time I talk to him. And what strikes me, the takeaway is, coal is still going to be popular for years to come and necessary to use. And all the money that has been put into green energy that could have built a great energy independence for the U.S. like it had when we were fracking like crazy. We're never going to see that again, are we?
We are not going to see it, but I think, and this is an important point, probably the listeners should listen to this. There are a lot of people talking about shale, and most people are bearish on shale. That's the end of shale. Is going to peak. It's already peaked, etc. I think we are going to hit another record. It just, we need to define what crude is, what NGLs are. But the issue here is this, that what people are missing is this. Companies went to the western flank of the Permian, and they drilled massive wells there. and they ended up with gassier wells, which means that have more gas, has more NGLs. This is not good because they get less money. If you study the experience of those companies over time with those wells, as we predicted in our report, that 2-3 months later, they will revert to zones and regions with a lower API. So instead of drilling for API of 50 and 52, they will go to something like 38 and 40. And that's what we are seeing right now. And people must understand that even if the total number is flat, because of this switch, crude production is going up.
Yeah, well, there are vast projects in Saudi Arabia. I forgot the other countries. There's still a lot of investment in massive projects for fossil fuels.
Absolutely. And we are, I mean, if you look at a country like Guyana, for example, right now, and you look at the plans of ExxonMobil is going to drill 35 offshore wells. Those offshore wells are massive wells. They are not like shale wells of 300 to 1,000 barrel a day. These are 40, 50,000 barrel a day wells.
Okay. Well, Anas, thank you again.
You're welcome.
We'll talk again in the fall. I recommend that people check Anas out, and at least he's a must follow on Twitter, and he puts out a lot of posts. I know because I retweet him, and really appreciate your insights, and congratulations on keeping your people on the right side of things, Anas.
Thank you. Thank you.
Great
Have
work.
a great day.
All right, our watchman in the oil patch, Anas Alhajji.
Thank you.
Okay, so you're very welcome. That's a wrap, everyone. And you could join the team in a little over 15 minutes for the morning edge. Don't just count your barrels of oil or your gas tanks or your pips. Count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.